This simple equation is the foundation of accounting. It is short and easy to remember, but it's more powerful than it looks. Yet, most students skip it or rush through it, and that's a big mistake. Without truly understanding this equation, you will never fully understand how accounting works. You will get confused with journal entries, stuck with T accounts, and lost in balance sheets. But if you stay with me just a few minutes, I promise, I will explain this equation in the simplest way possible, and you will understand this equation so clearly. So, let's begin. In accounting, there is a basic idea. What the business owns is always equal to what the business owes. That's it. This is the heart of accounting. What the business owns is called assets. Assets are things like cash, equipment, tools, or anything the business uses to run and make money. Assets tells us what the business has, what it controls and uses. What the business owes is explained in two ways. First, it may owe money to others like banks, lenders, or suppliers. This is called liabilities. Second, the business also owes the owner. Because the owner puts money into the business, this part is called equity. So together, the business owes the outside people, which is called liabilities, and the owner, which is equity. Now, to show this in one simple line, we write assets equal to liabilities plus equity. This is called the accounting equation, and it must always stay in balance. Every time the business buys something, earns money, or pay a bill, this equation is affected. But no matter what happens, the left side and the right side of the equation must always be equal. Now let's take a closer look at each part of the accounting equation, starting with assets. Assets are everything the business owns or controls that has value. These are used to help the business earn money. Assets can include cash, which is the money the business has right now, account receivable, which is money the business is waiting to receive from customers, inventory, which are products the business plans to sell, property, plant and equipment, land, buildings, investments, and goodwill. All of these are listed under the asset section on the balance sheet, which is a report that shows what a business owns and owes. Liabilities are what the business owes to people outside the company. Liabilities can include account payable, which is money owed to suppliers for goods or services, loans payable, which is a money borrowed from a bank or other lender, wages payable, salaries the business still needs to pay employees, taxes payable, interest payable. These are the company's responsibilities, things it must pay back. Liabilities are listed on the right side of the balance sheet under the liabilities section. Equity shows the owner's share of the business. It includes owner's capital, which is the money the owner has put into the business. Retained earnings are profits the business has made and kept inside instead of paying out. Drawings or withdrawals, which are money the owner has taken out for personal purpose. So equity answers this question. If the business sold all its assets and paid off all its debts, what amount would belong to the owner? Equity is also shown on the right side of the balance sheet, right under liabilities. So remember, assets are just what the business owns. Liabilities are just what the business owes to others. Equity is just what the business owes to the owner. And together, they always follow the rule. Assets equal to liabilities plus equity. Now, let us see how the accounting equation works in a real-life example. Just imagine this. You start a small business, you invest $1,000 of your money into your business. So right now, the business has $1,000 in cash, no loans, and no other people involved yet. So how does the accounting equation look? So as we know, asset is equal to liability plus equity. So in the asset section, we have $1,000, we have zero liability here, and we have $1,000 of equity. And this means that the business owes $1,000 in cash. It owes nothing to others, but it owes $1,000 to you, as you are the owner of this business. So that's your equity. Now let's say a few days later, the business takes a loan from a bank, $500 in cash. The business now has $1,500 in cash, liability of $500, and equity of $1,000, which is the owner's equity. So the equation is still balanced, right? Asset is equal to $1,500, and when you add up $500 with the equity, which is $1,000, it becomes $1,500. So it's equal to the asset, which is also $1,500. So this indicates that this equation is balanced. Then the business buys a laptop for $600 in cash. So the new value becomes cash of $900 and equipment, which is a laptop, which is equal to $600. So the total assets becomes $900 plus $600. It's equal to $1,500, and the liabilities and equity stay the same. So when you check the accounting equation, asset equal to liability plus equity, $1,500, which is the asset, is equal to the liability of $500 plus the equity $1,000. So they are still equal, and this indicates that the equation is still balanced. So all these examples shows that every time the business earns, spends, borrows, or even invests, the accounting equation stays in balance. That's the power of accounting. It always shows where the money comes from and where it goes. Now, let's quickly recap what we have learned. The accounting equation is the foundation of all accounting. It says assets equal to liabilities plus equity. This means what the business owns is always equal to what the business owes to others and to the owner. You learned what assets are, like cash, inventory, and equipment, what liabilities are, like loans and unpaid bills, what equity means, the owner's share in the business, and how every business transactions keep this equation in balance. Without understanding this equation, it's almost impossible to fully grasp journal entries, balance sheets, or financial reports later. So this equation is not just important, it's essential. If this video helped you understand the accounting equation, please like this video, comment below if you have any question. I will reply for each comment, and don't forget to subscribe for more simple, clear accounting lessons like this. Thanks for watching, and I will see you in the next video.